Massachusetts real estate just shifted gears. In September and October 2010, 65, single-family closings climbed while prices nudged higher. September's statewide single-family median sat in a $625,000 to $654,500 band, and October printed $660,000. Let's set the stage. Across the state in September 2017, single-family home sales rose, with year-over-year growth landing between 4.8% and 8% depending on how you measure it. Put in raw terms, that month produced 3,769 single-family transactions. Prices moved too. The statewide median for a single-family home in September was recorded in a range $625,000 to $654,000, $500 up between 4.2% and 4.7% from September 2024. Condos weren't left behind. Closed condo sales in September increased 6.4% year over year, and the condo median hit $525,000, up 1%. The very next month, October 2025, momentum held. Single-family closings increased 5.6% year over year, totaling 3,921 sales. The statewide single-family median ticked up to $660,000, a 2.3% rise from October 2024. Condos pulled in a more mixed reading. Closed sales dipped 1.1% year over year in October, but the median still advanced to $549,900, up 2.8%. One important backdrop didn't change: inventory remained a friction point even as new listings improved. Zoom out to the year-to-date cadence through the first 9 months of 2025. Massachusetts saw 31,980 single-family sales in that span, a 3% increase over the same period in 2024. The statewide median for single-family homes over those 9 months reached $640,000, up 3% on the same basis. Those are steady numbers, not flashy, but tight, consistent, and telling. So, what shifted? Signals suggest 3 forces worked together as summer faded into fall. First, a recent mortgage rate cut helped unlock some demand that had been sidelined. Second, more homes hit the market. New single-family listings in September rose 7.5% year over year, and new condo listings jumped 13.3%. Third, the calendar itself exerted pressure. Heading toward year-end nudged both buyers and sellers to move. Then came a twist. Mortgage rates jumped after remarks that a December 2025 rate cut may not happen. The result is a more measured tempo, still active, but more thoughtful in how offers are written, prices are set, and closings get done. Underneath the surface, the supply picture created the current push-pull. In September, inventory for single-family homes fell 4.2% year over year, even as those new listings improved. By contrast, condo inventory rose 5.1% versus September 2024. That split matters. It means single-family homes, especially in suburban and exurban rings, stay tight, while condo markets, often in denser hubs, may be loosening slightly. In October, closings confirmed that tilt. Single-family activity up by 5.6%, condos down by 1.1%, even as condo prices rose. Massachusetts is not moving as one monolith. The map tells a sharper story. Consider the Boston-Cambridge-Newton metro. In September, Wellesley's typical home value was $1,969,343, up by $42,206 in a year, a 2.2% gain. Weston stood even higher, $2,220,602 with a $48,044 one-year rise, a 2.2% move that adds an entire compact car to the price tag. Newton came in at $1,490, $949, where the one-year change added $34,506, or 2.4%. Lexington, long a classic case of demand stability, reached $1,560 to $1,212 with a $26,790 increase, a 1.7% lift. Down the South Shore, Norwell led the state for one-year dollar gains in September, a typical value of $1,207,653, up $53,660, or 5.5% in 1 year. Nearby, Cohasset clocked in at $1,390,509, with a $28,174 increase, up 2.1%. Situate hit $976,398 and added $20,586 over the year, a 2.2% move. Marshfield printed 77D, $194, up by $19,792, or 2.6%. And Gloucester, north of Boston, marked $759,274 with a $30,224 one-year gain, a 4.1% bump. Head west and the pattern changes again. In the Pittsfield Metro, Egremont's typical value reached $805,000 in September, rising by $50 a week and $686 in 1 year, 6.9%. Adams checked in at $263,580 with a $20,736 jump, which equates to 8.5% year over year. West Stockbridge recorded $670,106, up $20,213, or 3.1%. Stockbridge touched $738,102, a $26,652 increase, up 3.7%. Monterey posted $729,616 and gained $28,985, a 4.1% rise. The Berkshire villages are moving, and their percentages are loud even when the absolute numbers are smaller than Greater Boston's. The Springfield Metro shows its own cadence. East Hampton's typical value hit $422,674, adding $18,765, a 4.6% rise year over year. Longmeadow landed at $522,062, up $20,563, or 4.1%. These are mid-sized, steady gains, not the explosive surges of 2021, but persistent enough to move household budgets and lender underwriting in real time. The Worcester corridor remains a magnet for spillover demand. Grafton marked $600,841 with a one-year gain of $17,485, up 3.0%. Sutton posted $627,201, a $17,573 increase, and 2.9% growth. Berlin reached $655,080.05 an hour, adding $21,575, or 3.4%. These are crisp 3% edges that compound quickly when layered on top of 5-year gains that already pushed some towns past the 40% mark. Look back to the North Shore and the nodes just beyond Route 128. Needham's typical value reached $1,513,544 with a $22,323 one-year rise, 1.5%. Dover's homes were at $1,746,599, gaining $35,329, up 2.1%. Concord printed $1,439,337, up by $34,801, or 2.5%. Lincoln landed at $1,518,768 with a $36,647, one-year increase, 2.5%. Westwood, just off the junction where buyers chase commuter rail, and yards stood at $1,211,197, up $23,479, a 2.0% climb. Some towns surged on sheer dollar volume. Manchester by the Sea clocked $1,280 to $9,884 with a $46,657 uplift, 3.8%. Wenham recorded $1,400,002, rising by $46,683, 4.7%. Boxford came in at $1,047,997 and added $33,762, up 3.3%. In Newton's orbit, the pull of top-ranked schools and tight single-family inventory kept the $1,490 to $9,949 typical value afloat, with that $34,506 nudge. Even in this patchwork, scale matters. The typical home value across the United States in September was $364,891, essentially flat 0.0% higher than the prior year. Massachusetts' local realities sit far above that baseline, from $422,674 in East Hampton to $220,602 in Weston. Every extra $10,000 in one-year increase is leverage and friction leverage for sellers, friction for buyers, and the map is full of 20K, 30K, and 40K steps. Now, shift to a single town for a moment, Natick. In September, the median home sale price there rose to $895,000 across 15 sales, up nearly 2% in price compared to the prior September. For the year, the average home in Natick costs $980,000, a 7% increase over the same period in 2024. That's a mid-tier suburb posting near million-dollar averages while closing only a few dozen deals a month. The story is not volume, it's velocity at the margin. Statewide, September's split screen came with supply and speed. Single-family inventory was down 4.2% year-over-year, while new single-family listings rose 7.5%. On the condo side, inventory increased 5.1% and new listings jumped 13.3%. When more for sale signs show up even as existing stock remains constrained, it suggests a market welcoming new entries without fully unclogging. That tension helps explain why closed single-family sales grew between 4.8% and 8% year-over-year in September and 5.6% in October, while median prices kept advancing. For sellers, the message is straightforward. This is a Goldilocks pricing environment, neither overly aggressive nor timid, which draws traffic and bids. When a home is priced to the market, buyer interest is there. September's statewide uptick of 6.4% in condo closings alongside a 1% rise in the condo median to $525,000 shows the effect. A modest price run plus more doors opening equals deals. October's 3,921 single-family closings, with a $66,000 median, continued but did not accelerate. For buyers, patience is becoming a skill again. The market is still competitive, but the September to October pattern points to a more deliberate pace where clean offers and good timing beat rushed bids. Early fall's mixed new listings up 7.5% for single-family and 13.3% for condos creates windows that were rare a year ago. Yet those windows come with a warning label, a jump in mortgage rates, after remarks that a December 2025 cut may not happen, can shrink affordability bands overnight. The geography of price growth fills in the nuance. Rockport on Cape Ann showed a typical value of $862,050 to $4 in September with a $17,210 one-year increase, 2.0%. Danvers reached $721,646, up $17,993 or 2.6%. Raleigh recorded $787,048, gaining $18,492, a 2.4% rise. Topsfield hit $961,242, adding $19,580, 2.1%. West Newbury stood at $942,399, up $19,854, or 2.2%. Together, these towns outline a corridor where single-family scarcity and lifestyle demand keep the needle moving even without double-digit surges. Further south, Pembroke posted $648,314, up $17,750, a 2.8% one-year lift. Duxbury reached $1,765, adding $24,087, 2.3%. Marshfield $774,194, and Situate's $976,398, both carried $20,000 plus gains, 2.6% and 2.2% respectively. Cohasset's $1,390,509, with a $28,174 increase slots neatly into that band. Along this shoreline, the dollar increases stack, and the cumulative effect feeds back into the October single-family median, reaching $660,000. On the Merrimack, Lawrence stood at $500,341, with a $17,738 one-year rise, 3.7%. Methuen checked in at $609,720, with a $20,348 increase, 3.5%. Andover's typical value landed at $980,274, up $22,976, 2.4%. Hamilton's $1,878,754, with a $22,767 increase, 2.7%, points to the same pattern. This beltway saw growth in small steps, 2 to 4%, just enough to keep appraisals chasing closings. Cape Ann and its satellites add to the mosaic. Gloucester's 4.1% gain, $30,224, brings it to $759,274. Marblehead posted $1,250, $768, with a $19,002 move, 1.9%. Manchester, at $1,289,804, rose by $46,657, a 3.8% jump. Wenham's $1,437, with a $46,683 gain, up 4.7%, shows how even smaller towns can stamp big dollar growth onto their medians within a single year. Pull back to the Berkshires again, Tyringham at $694,254, with a $21,923 gain, 3.3%. Mount Washington hit $621,035, a $30,308 increase, 5.1%. These elevations remind us, Massachusetts' broad trend is steady, but local terrain is rugged. Small base values paired with outsized percentage moves create pockets of rapid change even while statewide medians drift a few points a year. Within the Boston-Cambridge-Newton metro, the gravitational pull of prestige towns is unmistakable. Dover's $1,746,599, up $35,329, 2.1%. Lincoln's $1,518,768, up $36,647, 2.5%. Weston's $220,602 with that $48,044 rise, 2.2%. Wellesley's $1,969,343 with a $42,206 increase, also 2.2%. These aren't speculative spikes. They are well-heeled suburbs compounding from already lofty levels steadily, not frenetically. The North Shore's mid-market towns underscore that same steadiness. Boxford at $1,047, up $33,762, 3.3%. Newbury at $925,253, up $22,306, 205%. West Newbury and Rowley, both adding roughly $18,000 to $20,000 in 1 year. Danvers at $721,646 with a $17,993 move, 2.6%. The arithmetic is consistent. Local demand plus limited inventory equals methodical appreciation. Massachusetts' fall market carries another subtext: strategy matters. Sellers who set Goldilocks prices, neither underpricing that leaves money on the table nor overpricing that leaves the house online, are meeting demand. September's closed single-family sales rose between 4.8% and 8% year-over-year. In October, they rose 5.6%. Both months saw medians increase to a band of $625,000 to $654,000, $500 in September, and $660,000 in October. That is what a balanced pricing environment looks like when inventory is tight but not frozen. On the ground, that strategy is fueled by sweat equity. In Greater Boston, there are teams coordinating contractors for renovations, navigating permitting, and managing rentals as part of a full-service package. One team described shoveling driveways on Christmas Eve to keep a showing on track. Another veteran in Westwood has sold over $1 billion of real estate across 3 decades, consistently ranking at the top of her office and within the top 1% nationally. The point isn't the resume, it's what those metrics signal. The level of execution required when a $660,000 statewide median in October meets towns where the typical value regularly clears $1,000. Innovation plays a role on the supply side, even if in pockets. In Concord and across Metro West, a firm focusing exclusively on high-end accessory dwelling units has built a turnkey pipeline, from concept to permitting, construction to delivery, tailored for multi-generational living and lifestyle needs. Their portfolio includes the only subdivision in historic Concord developed by a woman-owned firm and a home that became the most viewed by a major Boston publication in 2023. Their Hosmer Meadow project even showed up in a 2021 bank annual report. It's a reminder, building new supply in Massachusetts often looks like infill, reconfiguration, and precision, not just mass subdivision. Back to indicators. September's condo side flashed options expanding with a 5.1% increase in inventory and a 13.3% jump in new listings, while closed sales climbed 6.4% and the median price reached $525,000, up 1%. The single-family readout flashed tight but turning, with inventory down 4.2% year-over-year, yet new listings up 7.5%. October split 3,921 single-family closings, up 5.6%. Condo closings down 1.1%. Is a natural consequence of that September setup. Within Boston's orbit, micro differentials persist. Winchester hit a typical value of $1,514,768 with a $19,899 one-year rise, 1.3%. Newton's $1,499,949 gained $34,506, 2.4%. Needham's $1,513,544 added $22,323, 1.5%. Concord's $1,439,337 edged up $34,801, 2.5%. Andover at $980, $274, up $22.70, $976, 2.4%. The numerators are high, the percentages look small. But in hard dollars, those are car-sized increments in a single year. Smaller towns, big moves. Sherborne posted $1,209,864 with a $35,985 one-year gain, 3.1%. Lincoln's $1,518,768 with $36,647, 2.5%. Boxford with $37,762, 3.3%. Hamilton with $22,767, 2.7%. Cohasset with $28,174, 2.1%. These are the numbers that turn a $900,000 pre-approval into a $920,000 reality, or keep it at $900,000 if rates edge up. The Cape and Islands have their own tempo. Chilmark in the Vineyard Haven Metro stood at $2,323,845 in September, up $17,690 and 48% year over year. That's the quietest percentage in this list, yet it adds a premium sedan to the typical price in a single 12-month stretch. In Barnstable County's halo off this particular list, similar dynamics are at work. Scarce inventory on coastal land, dollars rising more slowly but from Mount Washington-like elevations. Middlesex County's growth corridor reveals the mid-range spine of the market. Ashland posted a typical value of $667,142 with an $18,043 one-year rise, 2.8%. Westwood's $1,211,100 $197 with a $23,479 increase, 2.0%. Newton's $1,490,949, and Lexington's $1,561,212. At those $34,506 and $26,790 increments. The pattern is consistent across Route 2 to Route 9, the mid-single-digit price growth that keeps buyers in the game as long as rates don't spike. Speaking of rates, the guidance is simple. A recent cut helped. Remarks that a December 2010 55 cut may not happen pushed rates up. The effect shows up in September and October. More listings, modestly higher medians, steady closings. If rates stabilize, the Goldilocks pattern stronger showings and right-priced offers should persist. If rates jump again, the October condo, softening down 1.1% in closed sales year over year, could widen. Beyond the close-in metros, Western Massachusetts continues to put up double-take percentages. Adams logged an 8.5% one-year change with a $20,736 increase to $263,580. Egremont's 6.9% on top of an $805,000 base is equally striking. Monterey's 4.1% with a $28,985 lift reaffirms the pattern. West Stockbridge's 3.1% with a $20,213 nudge. Stockbridge's 3.7% with $26,652. These Western shifts don't get the marquee, but they tell you where both second home and local demand is pushing prices. Now, step back to statewide cadence. October single-family closings, 3,921 homes, up 5.6% from October 2020 to 4. October single-family median, $660,000, up 2.3% year-over-year. October condo closings, down 1.1% year-over-year, with a median of $549,900, up 2.8%. The ratio of sales to price growth points to a market where buyers are active but disciplined, and sellers are reading the room on list prices. September confirmed that too. Single-family closed sales grew between 4.8% and 8% year-over-year. Condo closings up 6.4%. The statewide single-family median came in between $625,000 and $654,500, up between 4.2% and 4.7%. Condo median, $525,000, up 1%. Inventory, single-family down 4.2%. Condos up 5.1%. New listings, single-family up 7.5%. Condos up 13.3%. Those figures are not noise, they are the operational reality every offer appraisal and rate lock is living with. The Boston-Cambridge-Newton Metro's high end keeps compounding. Weston at $2,220,602 with a $48,044 increase. Wellesley at $1,969,343 with $42,206. Dover at $1,746,599 with $35,329. Lincoln at $1,518,768 with $36,647. Newton, Lexington, Needham, Concord each, adding between about $22,000 and $35,000 in a year. These aren't sudden spikes, more like metronomes keeping time. Meanwhile, mid-tier towns Ashland at $667,000, $142, Andover at $980,000, $274, Methuen at $609,000, $720 show that the latter remains climbable when rates cooperate. North of Boston, Rowley's $797.48 and West Newbury's $942.99 both added roughly $19,000 to $20,000, 2.4% and 2.2%. Danvers and Hamilton $721K, $646 and $878, $754, each added just under $23,000. For buyers, that's what a well-priced home feels like in fall, attainable with precision, not with casual bids. To the south, the arc from Norwell to Duxbury to Scituate and Marshfield is still strong. Norwell's $53,660 gain. Duxbury's $24,087. Scituate's $20,586. Marshfield's $19,792. These towns line the coast and press toward that $1,000 mark or beyond. When the statewide single-family median is $660,000 in October, these coastal neighborhoods function as a separate tier higher medians, similar percentage growth, stronger dollar steps. The condo market's texture is evolving too. September's 5.1% increase in inventory and 13.3% rise in new listings likely gave buyers more to choose from, and a 6.4% increase in closed sales, plus a 1% uptick in the median to $525,000 confirms deals got done. In October, with closed condo sales down 1.1%, but the median up 2.8% to $549,900, you're seeing a segment where price resilience meets buyer selectivity. It's not a stall, it's a recalibration. In suburban markets like Natick, the recalibration wears a clear price tag: $895,000 for the median across 15 September sales, nearly 2% higher than a year before, and $980,000 as the average for the year, up 7% over 2024's same period. Buyers in this pocket are paying close attention to each $10,000 increment because rate moves can swallow those increments in a single day. Recovery also shows up in the year's arc. Through the first 9 months of 25, the state recorded 31,980 single-family home sales, 3% more than the first 9 months of 24-40. The statewide single-family median in that span, $640,000, is 3% higher. That's the definition of a steady expansion, and it frames the stakes for the final quarter. Can closings hold in the $3,900 per month zone while the October single-family median $660,000 stays sticky? At the micro level, names tell the story. Winchester, $1,514,768, up $19,899, 1.3%. Newton, $1,499,949, up $34,506, 2.4%. Needham, $1,513,544, up $22,323, 1.5%. Lexington 19, $560, $1,212, up $26,790, 1.7%. Concord, $1,438,337, up $34,801, 2.5%. Weston, $2,220,602, up $48,044, 2.2%. Wellesley, $1,969,343, up $42,206, 2.2%. Dover, $1,746,599, up $35,329, 2.1%. Lincoln, $1,518,768, up $36,647, 2.5%. Each number stacks to reveal a rhythm, call it Massachusetts moderation, with heavy price tags and measured gains. Along the coast and island gateways, chill mark at $2,322,845 with a $17,690 gain. Billion-dollar debt offers a contrast. Marblehead's $1,258, $768, and $19,002, 1.9%. Gloucester's $759,274 and $30,224, 4.1%. Manchester's $1,280 to $246,657, 3.8%. Wenham's $1,040,132 and $42,668, $4, 4.7%. The case is clear: weighty medians, steady to strong yearly increases, depending on local supply, shoreline appeal, and the distance to major job centers. Number 10. Supply-side creativity will matter as this cycle matures. Concord's woman-owned subdivision and Metro West's luxury accessory dwelling unit pipeline show that adding livable square footage doesn't have to wait for sprawling greenfield development. Projects that travel from concept to permitting to construction in a single, turnkey workflow can bring a $1,439,337 Concord median into reach for multi-generational households or investors looking to add value without moving dirt across county lines. The human element, always the hinge, operates in thousands of small, decisive acts. A driveway cleared on Christmas Eve to preserve a showing. A lender recalculating pre-approvals after a rate jump tied to the possibility that a December 2020 10-5 cut may not happen. An owner revising a list price from aspirational to Goldilocks to catch the first weekend wave. September's new listings up 7.5% for single-family and 13.3% for condos. Say those decisions are being made every day. Now, draw the causal chain tight. What happened? Single-family closings rose between 4.8% and 8% year-over-year in September, 5.6% in October to 3,769 and then 3,921 sales, while medians lifted into a $625,000 to $654,500 band before reaching $660,000. Why? A recent rate cut opened the door, more listings hit the market, and the seasonal push into late fall triggered decisions. Who is affected? Buyers in Natick seeing a $895,000 median across 15 September sales and a $980,000 year-to-date average. Owners in Norwell riding a $53,660 one-year increase to $1,207,650, and families in Adams navigating an 8.5% one-year surge on a $263,580 typical value. What's next? A watch on rates as year-end approaches, and on whether new listings keep rising against a single-family inventory that fell 4.2% year-over-year in September. The statewide context remains sturdy. Through 9 months, 31,980 single-family sales, up 3% over 24. A $640,000 statewide single-family median over that span, up 3%. October's $660,000 single-family median and 3,921 closings show that demand is present and persistent. Condo dynamics are mixed but not weak. $549,900 median in October, up 2.8%, with closings off 1.1%. For a state where values like $1,560, $1,212 in Lexington, and $1,499,949 in Newton are normal, that's a durable equilibrium. In the coming weeks, the base case is continuity. If rate volatility doesn't intensify, expect the fall pattern to hold. Single-family activity notching mid-single-digit year-over-year gains. Condos toggling between modest increases and slight dips in closings, and medians edging higher by 1 to 3% in the aggregate. Balanced list prices, Goldilocks pricing, should continue to attract offers as long as new listings provide fresh inventory to tour. 2 watch items could tilt the board. First, mortgage rates into December 2013. A stable path would support October's 3,921 single-family closings dynamic. A renewed spike after remarks about December could sideline marginal buyers and slow condo absorption, as reflected by October's 1.1% dip in condo closings. Second, the flow of new listings. September's 7.5% rise in single-family new listings and 13.3% jump in condo new listings created much-needed choice. If that pipeline tightens while single-family inventory remains 4.2% lower year-over-year, price pressure could build in early winter, especially in towns already running at $1,000 plus typical values. Massachusetts is writing a careful chapter-measured price gains, improving transaction counts, and a map where Norwell's $53,660 one-year leap, Egremont's 6.9% climb to $805,000, and Weston's ascent to $220,602 all fit in the same frame. Keep your eye on the October anchor, $660,000 for the single-family median statewide, 3,921 closings, and the September foundation new listings up and inventory diverging between single-family and condos. That is the path of least surprise as the calendar approaches December. If you found value in these numbers and want to stay ahead of Massachusetts' next move, make sure you're subscribed so you never miss the data as it drops.